So I heard a couple things. One is that there's an obvious negative halo off of the Snap news. The other was that, look, they're very domestic focused, unlike Facebook. They're highly reliant on Apple and not so much on the Facebook side. Directionally, how did you respond to last night's news?
It was clearly, I think you said, the flare across the bow. I was shocked to hear the magnitude that Snap talked about this impact. They got it down by 13%. Despite their user metrics continuing to inch higher. And so I think you really need to think about their comments, their negative outlook in two segments. First, in terms of Apple and some of their policies around ad tracking. I think first piece that jumped out on that front is that when we talk to these companies, the social companies, they despise Apple. They want to get away from Apple, and this is exactly the reason why they want to do that. They are going to navigate this, and it's going to have some form of an impact on Facebook. It won't have an impact at Facebook and Twitter. It will not have an impact on Google just because of the nature of how their ads are. And of course, the second piece was around this dynamic about the supply and advertisers pulling back during the holiday quarter. That one was a little bit perplexing to me, in part because this supply issue has been around a long time, and why is now Snap talking about it? They did mention on the call last night that this was less of an impact, the soft ad market, compared to the impact of the changes that Apple has made. So the simple takeaway is this: we got a very clear read about what the expectations are, and I think we're going to see a lot of commentary from Facebook next week about the Apple policy changes. But even though I am not a fan of what Facebook does to the world's mental health, I think that shares are going to go higher. I think it was Jeff was talking about all this is bad news baked in, and I don't think it could get much worse for Facebook. And I just want to end my thought with one thing, Carl, here. Yep. Is if you want to anchor the Facebook results in one metric, it's pretty easy to do. It's daily active users. It was up 7% last quarter, 8% the previous quarter. Before the pandemic, every quarter for the 3 years previous, it was up 8%. This has been rock solid. If they keep DAUs going higher at 8%, 7%, something like that, investors are going to give them a pass. It doesn't matter what Facebook says. The stock is probably going higher on the print.
Well, I would add to that, Gene, the idea that Facebook has been pretty direct in telegraphing, look, this is going to be an issue for us, at least on the iOS side. I wonder, compared to Snap, if you think Snap was, I don't know, maybe a little derelict in not guiding the street a little bit more ahead of this surprise from last night.
Yeah, yes, they will. And I guess in Facebook's case, they've talked about other times when, be careful about, for example, some of the policy changes in Europe around, it wasn't ad tracking, but around privacy and the impact on what that could be on their business. And every time they've done that, they've just powered right through it because, they are the only global directory. They're the only reach that advertisers can get to. And so I think that, yes, Snap probably could have done a little bit better of a job telegraphing this. I think that there's going to be some messiness around the language, around the guidance with Facebook, undoubtedly. And then they're going to, of course, marinate the quarter with a heavy dose of the metaverse, which I think will probably get everyone over the top to move the stock higher in the near term.
Hey, Gene, it's Jeff Mills. Quick question for you. So we're obviously talking about the impact on Snap, Facebook, but then throw Twitter in there. So Snap had an advantage because they were really executing on direct response ads. Twitter hasn't done a great job of that yet. So I wonder if you're buying the narrative that Twitter is probably most insulated from what's going on just because that's such a small part of their business and they haven't really succeeded in terms of making that a major revenue driver.
Exactly. I think if you kind of line them all up, Twitter's best position, most insulated. There is some dynamic around just the broader ad market. Of course, Google is direct advertising. They don't have the Apple privacy changes or tracking policies to navigate. But I think if you put it all together, probably Twitter is best positioned going into the print at least related to kind of the tone and the outlook. Again, I think that Facebook, if you just add up everything that's been said over the last month and a half, it is pretty bad. And usually when a lot of bad things have been said before a print, it gets priced in.
It's going to be a great week. Fun to watch. Gene, have a good weekend. Thanks.
Thank you.
Munster. Let's trade this, Mike. Give me some of your favorites, and what would you avoid?
Yeah, I mean, I think we talked about this in the last half hour, and obviously Jeff mentioned it too. I mean, at 24 times under any other circumstances, I mean, you'd have to say that on a fundamental basis and based on their growth rates that Facebook looks cheap. I've liked Microsoft. I continue to, despite the valuation. If you don't sell it, as is often said, then essentially you're buying it right here. So I think you can stick with that. I still like Amazon. But of course, the issue with Facebook is one of taste. In other words, you have to hold your nose to buy it when you consider some of the issues that surround the company. But I do think all of that sort of has already been priced in. The market is probably going to hold its nose from here on in.